Hello, this is Andrew from Trend Following Mentor and Abraham Trading Consultants. Today is the 11th of April 2014, and in this short video I'm going to talk about the Nasdaq sell-off and how, and not just the Nasdaq, the S&P as well, and really you don't know how bad it can really get, or it can simply reverse. But before I begin, always, none of this is meant for any personal explanations or any personal guidance. Even though I am asked, I do not give any personal guidance. What I try to do is help you become better traders. That's as well if it's either, again, a person, private trader, as well as hedge funds and companies and things of that nature. And I'm in touch with many, many different hedge funds throughout the day. And what I do is actually it's here, I do consultation. I trade for a living. I mean, I've been trading since 1994, but I also do hourly consultation, and I also do on-premises consultation. But let me get to my point. What I want to talk about is the stock market, and especially the Nasdaq. Nasdaq yesterday was down about 3.1%. It was its worst loss since November of 2009, November 9th, 2011. And the other interesting thing, and let me just tighten it up here, you can see the absolute spike in volume. You don't want to see markets selling off on high volume, which is here and here. But take things into context. Like I said, the worst loss, which we just went through yesterday, was in 2011. Well, we rebounded then, 2012 and 13, and we had some nice runs. So again, anything can happen when we're trading. And the idea is that you have to have an exact trading plan. And when I say you don't know how bad it can get, I had a discussion actually with a firm that they're value investors, and they basically said that I'm being too cautious. And they said it's impossible to time the market. And I said, well, you know what? I said, first of all, you can tell that to people that bought WorldCom and Enron and even Cisco, that they can't time the market, but those people really aren't sitting with any profits, and they've really had tremendous losses. The same can be said with people with AIG and Citi and so many others. So I reiterated my simple point, and that's what made me think about this title for this week's or today's simple explanation is you don't know how bad it can get. And I also reiterate that it can bounce right back up. But you can see this indicator, which I built in Metastock, that basically when you're above here, you're on a buy. And typically, I guess I put my name on there, Andrew Abraham buy. And then when it fell off, you went to cash, buy, went to cash, buy, went to cash, and we went to cash here. But what's cool, let's go to like here, the rough periods. Let's go to like 2007. You could have missed all of this disaster, all of 2008 debacle. It isn't just this. You could have missed this. The thing is, there's no perfect indicators, there's no perfect anything, but it keeps you on the right side of the market, and that's what we try to do. We try to buy the strongest stocks in the strongest sectors when the market's healthy. And that gets to my next point. The strongest sectors, the leaders. Most of the leaders that I've been looking at have been falling out of bed, and the leaders have been such as like Facebook, Priceline, UBNT, Under Armour. There's a couple of stocks that I'm watching. They're still holding up. Actually, I sold my positions in QQQ and in GLOG. But the fact is, and I want to say it to ad nauseum, we don't know how bad this can really get. And the leaders have been falling. The biotechs have been getting clobbered. What led this market up has been the biotechs. What we've been rotating into, it seems, the airline stocks. And yeah, I was in Spirit Airlines because it was something new and innovative. But to see like American Airlines and all these other airlines as leading stocks, I mean, that doesn't really, it's more defensive. And even bring up the point about defensive, the 10-year bond fell 4 basis points yesterday. It's like people are running, as a place to hide. But again, anything can happen. I mean, like if I look at this chart, you just do very simple something like this. The key is, how do we react when we get to this point? Do we take that out, or do we rebound? Again, anything can happen, but you need to have a plan. The fact is to say that, I'm being too prudent is really not being prudent in my interpretation. And that's exactly what I told this group. I said because they feel they have a cushion being value investors. And I brought up the point about Warren Buffett, how much he was down twice in the 2000 decade. Not just him, but also Ackman was also down. And all the so-called value investors were down almost 50%. You don't really want to go through a 50% drawdown. It is not financially comfortable. It's not emotionally comfortable. So really, you try to do is take pieces out of the move. And you let the market tell you how much you can stay in, which it did here. This was a massive move. This was a nice move, and maybe it'll rebound up. Again, this is Andrew from Trend Following Mentor. I invite you to come to the blog. I write all kinds of things to try to help you become better traders. I am a trader myself. I've been trading since 1994, every day in the market, except Saturday and Sunday, even though I work on Sunday to prepare for Monday. But the idea is I'm here to help you if you want some help. I do hourly consulting. I do one-on-one consulting. I also do on-premises. And the idea is to become a better trader. And it's not easy. You're always going to have losses. You're always going to have drawdowns. But you try to mitigate the big drawdowns. That's the goal. Thank you, and have a great weekend and a great holiday period for everybody.